Hi, my name is Lon Welsh at Your Castle Real Estate, and I want to talk a little bit about inflation. There's been a lot of articles in the media lately with some experts outlining really compelling cases why inflation is likely to go up quite a bit, and other experts having just about as compelling cases about why inflation is probably going to stay flat. I'm not exactly sure what's going to happen, and neither probably are you, unless you're an economist. But the great news is we don't need to worry about it too much. Here's a chart from the Wall Street Journal showing how different asset classes perform and how they're tied to the overall inflation. And you can see very close to the top of the chart is that real estate is fairly highly correlated to the inflation rate. So what this means is in times of lower inflation, real estate will appreciate at a slightly slower pace. And at times of high inflation, real estate will keep pace and the prices will go up just about as fast as the inflation does. So this means that real estate is a hedge against inflation. It's a way to store your money in a way that the purchasing power of your money will not be eroded over time by inflation. Historically, a lot of investors think about gold as a way to hedge against inflation, but you can see on the chart that gold is not as effective as a hedge against inflation as real estate is, which is kind of comforting to think of in a time when we may have more inflation in the future. Nobody really knows. At the bottom of the chart, you can see long-term government bonds, and they do the worst. And that's because those bonds are locked in at usually a very low interest rate for, by definition, a long-term bond, a very long period of time. So if you're locked in at a bond paying, like right now the 10-year Treasury pays about 1%, and if inflation's 3 or 4%, you're losing the purchasing power of your money every single year. You can see that stocks are also very close to the bottom of the chart. They tend not to do as well in a high inflation environment. So what this means for you as a consumer is if you're thinking about trading up to a larger house and you're wondering, would that be a safe investment for me in a time of high inflation? Historically, the answer is yes, it will be exceptional. If you're thinking about investing in real estate to diversify from your stock and bond holdings, this would be an unusually great time. A lot of investors are complaining that the returns on real estate are a little bit lower than the historical norm, and that's absolutely true. But the mortgage rates that you borrow at are at the very bottom of the historic range, so the spread between the return the investment in real estate makes and what you cost to borrow is actually better than average right now. So to have a chance to earn an above average return and hedge inflation at the same time is a very rare gift. So it's one worth exploring.